Hussbus bus stop.
Good morning, JP Hussey here of the Hussey Team Mortgage Advisors with this week's Hussbus bus stop. I hope everybody is well. I hope everyone had a nice holiday. I had a great holiday with my family. It is a chilly day here in the Philly area, as it should be in December. We've had some weird weather. It's finally getting cold. I like the cold. I like when it's crisp and cold. You can see your breath a bit. I know some people hate that, but I love it. And it's one of those days. Anyway, the new year is quickly approaching. And again, this is when everyone, you should always maybe set goals at all different times when needed. But this is the time of year where people are really starting to come up with new goals and the year's flipping over. So one thing I want to talk to you about, if one of your goals is either maybe refinancing, cash out, refi, put that pool in the backyard, update the house, or buy a new home, if that's one of your goals, obviously that's what we do, so we got to put it out there. But if it is one of your goals, I want to let you know that there's always a way to get a mortgage, like 95% of the time, right? Obviously, sometimes there's just no way, shape, or form, but when you put a little work into it, you can get very good terms and you can figure out a way to get qualified with those best terms, all right? Sometimes you got to just pay off a little bit of debt. This is why we preach budget, 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 right? Not all rate. Very tough to control, right? What's your budget? Because when we have a budget involved, we can figure out a way to get you qualified and with good terms, all right? Like I'm saying, sometimes just paying off a little bit of debt, putting less money down, gets you to qualified. It's weird how that works, but there's different swings. Numbers are weird, right? So that's one thing you can do. It's a puzzle. There's always a way to get it done. Add a co-borrower if you need it. All right, like I said, pay down some debt. Take a higher term. Instead of going with a 15-year, go with that 30-year, which I always agree with. 30 years are the way to go. You always pay down on it, but you have a smaller payment. But nonetheless, that's another one, right? One big thing I want to make you aware of, if you're out getting a mortgage and your loan officer says, hey, your credit score's too low, we can't do it. And then they just move on to the next person, right? They don't put a little bit of work on it. Every lender's different. Every mortgage loan officer is different depending on how much time they got to work with someone's specific situation. But one big thing, right, is let's say it's myself and my wife, okay? My wife has perfect credit, all right? And I have really bad credit, let's say, where we're not even going to qualify. And remember, the lower the credit, the worse terms you get. Means rate might be higher, or you have to pay more points for that specific rate. All right, so a lot goes into credit, and my boys at www.mycreditguide.com will help you out. All right, Stan Parker. But let's say that's the situation where my wife has very good credit, all right, and I have very bad credit. And I go to a loan officer and I say, hey, you don't qualify. Your score's at 550. We do not have a program for you. You got to move on. Because when you're someone buying a house together, it goes off the lower of the scores to qualify. So even if someone's 800 and someone's 550, they go off the 550 if they're on the loan. That's the key point. If they're on the loan, they go off the 550, and that's it. Can't do the mortgage. So one thing that we've done a lot of times with married couples, when one has better credit than the other, right, is we remove me off of it. Get me off the loan, the financial piece of the pie, right? That goes onto your credit, off of that loan, that note, okay? Take that person off, and if the other person can still qualify with their income and only their debts that aren't joint, right, and they qualify, you can get better terms and actually qualify just in that one person's name, all right? And then that other person, me, the one with the bad credit, right? That person, all right, can go on the deed of the property, still have ownership in the property. They're just not on the note of the property, all right? That can be kind of confusing for people, but we look at that all the time. Sometimes someone has not the best credit, right? They're in the sixes, but we can still get it done with them, okay? But the rate's much higher, and you see it, and you're like, okay, we could have them on here. The rate would be much higher. They're fine with it. But what if we just remove this person? Let's put our ego aside here. Remove this person. You're getting much better terms, better rates. Everything's better. And then just put them on the deed, still have ownership. Doesn't matter. One's being a part of the note, okay, only, and one is being on the deed and having ownership. That's the only thing that matters, is having ownership in that home, all right? So that's one trick I want you to think about. I hope I explained it right? But you can always take one person off as long as that other person qualifies, and that person taking off the actual loan, the actual note, or the financial part of it, they can be removed but still stay on the deed of the property, which is the only thing that matters. Again, there's always a way to get something done. The best terms. I hope you're working with the right team. If you need anything else, please let us know. We'd love to be a part of your 2022 goals. Hope you have a wonderful holiday. Again, and Happy New Year.
Hussbus bus stop.